Okay, so welcome to the recorded lecture on trading stock for Papua New Guinea Taxation Unit. Okay, for definition of trading stock as per section 4 of ITA 1959, it says it includes anything produced, manufactured, acquired, or purchased for the purpose of manufacture, sale, or exchange, and also include livestock. In section 51, it clarifies the valuation of trading stock on hand at the end of the year and at the beginning of the year. So, in section 51, where a taxpayer carries on business the value ascertained under this subdivision of all trading stock on hand at the beginning of the year of income and of all trading stock on hand at the end of that year shall be taken into account in ascertaining whether the taxpayer has a taxable income. Where the value of all trading stock on hand at the end of the year of income exceeds the value of the trading stock on hand at the beginning of the year, that the assessable income of the taxpayer shall include the amount of the excess. So which means, in this case, if the value of the closing inventory or closing stock exceeded the opening stock, then any excess of that one will be considered assessable income. And on the third point here, it's quite the opposite. If the value of the trading stock on hand at the beginning of the year exceeds the value of income or value of the trading stock on hand, at the end of that year, the amount of excess is an allowable deduction. So these are the examples of items treated as trading stock. Okay, so for example, livestock. That will of course exclude those beasts of burden or which those livestock being used to perform some operations, okay, or activities within the company. Now, for containers, labels, packing materials, if it is included in the articles being produced, then that will be part of the trading stock. Computer software, if the entity is engaged in developing software for sale, then that will be treated as trading stock. Now, for motor vehicle, if it is held by a taxpayer which engage in selling cars, then that will be trading stock. Goods on consignment, the trading stock will be in the reported at the hand of the consigner or the one who are asked someone, we call it consignee, to sell the inventory. Land will be treated as a trading stock if it is held by a land dealer, and shares will be treated as stock if it is held by a stockbroker. Now let's have a sample calculation here. Okay, Mr. A, unmarried, owner of Amazing Store, has the following information from taxable year 2023. So he got sales 100,000 kina and then purchases 40,000 kina, opening stock 5,000 kina, closing stock 10,000 kina, but it includes 2,000 kina in transit, operating expense 15,000. So we are being asked to calculate for the taxable income of Mr. A. So remember, it talks about inventory on hand. Okay, so that 2,000 kina in transit for closing stock will be quite tricky, okay, when you see this kind of problem. Okay, so let's go to the solution. So we have a sale, and then we have to determine the excess of trading stock. Okay, so we have our opening stock, okay, of 5,000, and then closing stock, okay, 10,000 less 2,000. Remember, we only have to consider the on-hand stock or inventory. So the result, okay, we have 3,000 kina, and then assessable income will be 103,000. Okay. Then we have allowable deduction. We have outgoings for purchases. We have 40,000, and then operating expense 15,000. So we have 65,000. So the taxable income here is 38,000. And that's it for my presentation recorded lecture. Thank you for watching, and I hope you learned something.